Hello, hello, hello. Friday morning, end of the week. Hopefully, we can get a little bit of follow through today on some of the moves that kicked off last night. I guess the Chinese data came in a little bit lower than expected, putting a damper on the prospects for the world economy and the world's second largest economy. It seems strange to me that people were all excited about this happening because specifically, isn't the Chinese government trying to slow its economy a little bit and spur internal growth from consumers rather than being totally dependent on the outside world for its exports? But that's neither here nor there. Let's take a look at a trade I just executed, and we have the futures pointing lower, down by minus 53, S&P minus 6.3, oil's down, and it looks like we're going to have a negative open. What I did here is I just went and I tweeted it out on the Twitter feed, short the Aussie USD at 105, I believe it was at 105.15 or 16, and I'm looking for a move down to the 104.30 area, and I have a stop loss here at 105.45, so I'm risking 30 to get about 80 something pips, so it's a good 2.5 risk reward. What we're The objective of this trade obviously is that it broke below the trend line that's resisted it at 105.30. This last 4 hour bar is a little bit concerning, but I'm expecting maybe to get a little bit of Momo into New York, being that it's Friday and it was a down Monday, and maybe we'll have a little momentum to the follow through to the downside. The next pair we're going to look at is another compelling cross, is the USD JPY. As you can see, it is definitely in a wedge of sorts, but it is riding this trend line higher, creating a higher lows, but everything is capped around this 78.70, 78.80 area. And it looks like we're heading down back towards another test of the trend line support. It's funny when you look at a chart like this, it looks so obvious in hindsight that you should have just been buying, shorting, buying, shorting, buying, shorting. If trading was that easy, we'd all be zillionaires, right? If we get another bounce off here, I would expect another move higher towards the 78.70 area and another attempt at a higher high. The pair wants to break above 78.70, but it can't seem to find the follow through to do so. But then, you can't be 100. If we break this trend line, we could definitely be doing a pushback down towards 78.70. You could scalp these crosses in either direction with tight stops, like maybe 15 pip stops to the top or bottom, looking for moves up to the tops or bottom of the range. I would be hesitant though to sell to short the pair around the 78.70 area, because I think the ultimate objective is for a push higher towards the 79.15, then maybe even the 80 level in the short term. Let's look at the Euro USD cross. The Euro USD finally broke below the 50 fib. That's why we move our charts to our trades to break even. And now it looks as though the cross is heading back down towards the 6.18 fib from the most recent move, and I wouldn't expect actually much resistance at that level. We're going to get rid of that fib altogether. We could get resistance at that level, but I think with the momentum in New York trading, it's not going to go there. It's not going to be stopped there. If we get a move down, if we get to keep moving down lower here, we could definitely be heading towards the next level of support at 122.10, and ultimately down towards the 121.30 area, which would complete the retracement 100% of the advance from earlier in the week. Actually, from last Thursday and Friday. The trade here has already occurred. We're at mid-range. If you wanted to, the only thing I could see here at the moment is we went down to let's go to a shorter term chart, 15-minute chart. If you wanted to look for a pop higher, you could go with a nice risk reward. Set a stop 10 pips below 122.60, looking for a pop higher back towards the 123.30 area. It's not a trade I recommend, but it's a possible trade that you might be interested in based on your bias for the markets. Let's see what else we have here. The Great Britain is still riding higher. Let's look at this in a bigger chart frame. The Great Britain cross is still following trend line higher, making higher, making higher highs and lower lows. You could run another trend line actually right here, guys and gals, and we would see that that the pair appears to definitely be in a wedge of some sorts, with the wedge of some sorts, with the top of the wedge at 156.75, but we have resistance right here at 156. 156. If we break above this 156 area, we could be making a move down towards the 155 area, where we have the other larger trend line support. It's interesting to note that the euro and pound haven't been falling as quickly as the Aussie and New Zealand cross, but I guess that's because they're not more as directly related to the Chinese data. If we get a bounce at this level, we could go back to 155.70. What I'm watching here in reality for this pair is either a break at the 156.75 area, and then I'll be looking for a push higher, at least to the 50 fib up here at 157.82. Or if we break not this line, I'm not too interested in this short-term trend line. If we break this longer-term trend line that has contained the pair, I'll show it to you guys. It's contained the pair for the last few weeks, if actually for over a month. That's the trend line I want to watch, and if we break that trend line, we could be moving down towards the 154.57, and then ultimately the 154 area in the short term. Let's take a look at the New Zealand USD. So at the moment in this pair, there's really not too much for me to do, but if you have confidence in that trend line that I just showed you, you could go long right there and set your stops just a little bit below this 4-hour candle, which would come in at 155.77. So you would have to set your stops at least 10-15 pips below that. Let's take a look at the New Zealand USD. As you can see, the New Zealand USD, ever since it broke this trend line, it has been moving down, but at a snail's pace. And it's one of the more disappointing trades that I've had this week. We were short. Well, I recommended going short, I think right around here at 81.60. And we held it, and I think we were stopped out like right about there. No, it was right at the close of trading one day. We were stopped out because basically the pair spiked at it was 507 on Wednesday, and the pair spiked on either side, and the spreads shot out to almost like 15-20 pips, and they closed everybody out, and it was due to lack of liquidity and a large order went through at the least liquid point of the day, and then it never went back into the trade. We did go long here and caught like 10 pips after holding it for about a zillion hours, and then with the data yesterday, it has moved down continuously. I would expect a move back down towards the 80-60 area to cap the move lower, because if we look on the chart, we can see that the 80-60 area is the bottom of the support channel that it broke up, and I know I've shown you guys this before, but if we look on a daily chart, and you can see it was the congestion zone between March and into May before we had the decline. And there could be a lot of bitter back and forth action here. So I would actually look for a move back to 80-60 to maybe look into trying to get long that pair. CAD, I think we haven't looked at. The USD CAD, as we all know about this ascending channel that the pair has been fighting with. We went short, I offered to go short yesterday at actually this level because I was expecting a hold of this longer term trend line, which a longer term trend line and channel support, but it broke through, putting the most pain to everybody and that's the loonie, giving the most pain to everybody. And now the pair, then I think I went went long again around the 99.20 area, maybe a little bit lower, looking for a pop higher, and we have that right now. And I've just placed my trade into break even because we have data coming up in the short term at 8:30 Eastern time. We have Canadian employment report, and the employment report I think is expecting an increase of 6,000 jobs, and an unemployment rate to come in unemployment rate to come in around, I had this all written down. The unemployment report's supposed to come in, I think around like 7.2 or something like that. I'm not exactly sure about those numbers off the top of my head. And if we could see, well, it's hard to predict. I mean, with the data, we could see a little bit of volatility in the pair, and we could also see the pair move up to this trend line and then bounce back lower, as sellers try to restock on their positions. Let's take a look at the yen crosses because there actually was a bit of activity in the euro yen. In the euro yen, actually, let's show you this trade. I don't normally talk about this. The euro odd last night, I was watching this, and another trader recommended this trade. I sat there and I gave it a good look. And by the time I actually got done watching the Olympics, which I was taking out, it did bounce quite a bit. You see that there's a short-term bottom here. It came back down to test support. And if you could have gone long here at 160.30 and you get a pop up higher, if we look at a larger term view, though, you can see you're trying to catch a knife. This pair has been moving straight down, and if you did happen to get the reversal, I mean, you could get a move all the way back up to the 122.50 area by just taking taking maybe 50 pips of risk. If you were interested in trading the euro odd, though, I would wait for a pullback, maybe closer to the 106.30 or 40 area, and then put my stop a little bit below these lows for the week, which come in around 106.10. Let's say here, I'll throw a line on this chart. That's actually around 106. And so your risk reward is for a much larger move higher, and your odds of success are limited. But if you hit it, you're hitting a home run. All right, let's look at the euro JPY. The euro yen cross. Can't find it. There we go. The euro yen cross has been riding a trend, moving the trend lower. It's broken through the bottom of the zone. That this 96.70 level. Now that the pair is below this 96.70 level, you can see it actually moved down, moved up to touch it. Looks like it was in a triangle of sorts on the 4-hour there. Now it's broken down. The first objective on the trade lower would be probably about the 95.70 area, and then towards the 95. So as long as the pair is below the 96.70 area, my bias would be for a move back towards 95.7. And if we get a pullback in the short term back to 95.70, we could find sellers, and move into that point and try to push the pair lower. And the first objective would be 95, and then if you wanted to get, and you could, well, actually your first objective would be here at the, like I said, around this 95.70 area, or 90, then you could take some off, and then 95 take some off, and then you could look for, if you want to get real aggressive, look for a move down to the 94 area. Let's take a look at the Great Britain yen cross. The Great Britain yen, yes. It has been still in a very tight range here. Moved up to the top of 123.30. Now it's down to 123.20. It's moved down to 122.14. We have resistance at 121.70. The pair is basically sitting perfectly mid-range. I wouldn't do anything with that right now. Steer clear. Let's see, the Aussie yen cross. I believe this pair may have had a bit of action last night. The Aussie yen, yes it did. It broke below the trend line that has been holding it up so far. So you could have gone short right there, right then at 82.71. Set your stops up here, probably about 82.90, maybe even at 83. And it looks like that trade would have actually worked out very well. Well, not well. The 30 pips. We're going to move down towards the 82.40 area. If we break this 82.40 area, that'll be the more interesting trade. But I would wait for a 4-hour candle close below, and we could get a move all the way down to the 81.50. So this is a pair, the Aussie JPY, that I'm going to have my eye on heading into the weekend for maybe a reversal in trend to get a move lower. We could take. It looks like it might be getting ready to make that move as we speak. The New Zealand yen cross doesn't seem. We don't seem to hasn't been too active, but it has. Look, it broke. It moved up to the top of the trend line, tested 64.40, and now it's down almost 100 pips right there. That was actually a very easy trade. And right now it's the pair sitting mid-range. There's the only thing I would look for is a move down to 63 or a move back up to 64.40 area to look for a. I would expect if it moved up to 64.40, I would for sure I would expect a continuation move lower. If the pair moved to 63 today in today's trading, I wouldn't do anything because on Fridays we have a tendency to have a bit of follow through on our trades, and trades seem to close at the lows of the day, or because the volume gets thin and the path of least resistance is to go chase the stops all around. The CAD Japan all week we've been talking about the 78.90 area. The pair did shoot up and now is above the trend line at 79.10. You could go short right here, right now, looking for a move lower, but I'm not 100% sure. I would let the price action tell me what to do on this, and wait for it. I would wait for at least a 4-hour close above or below this consolidation zone right here. If we get a 4-hour trade above, and by above I mean it's not like this where it's popping out back bend. I want a candle that's going to have almost nothing in the consolidation zone and a solid finish above. If we do, we could go long and look for a move up towards the 80.20. If we get it below, we could go short and we're looking for a move initially towards 77.40 and then ultimately down towards the 76.80, then 76.30. That's it for all the rundown on the majors. Watch the Twitter feed, and I'll be putting up my updates and sending out charts and so forth of the trades I'm currently looking at. I'm short the Aussie and the US CAD. I'm long, but I want break even because we have the news coming out today, and I guess I can give you the numbers. The Canadian Employment Report, they're expecting 7.2% and 6,000 change positive, and that is due out very shortly. All right, everybody have a great trading day, and good luck and have a great weekend. I am going to Mount Rushmore this weekend in the middle of nowhere. I think it's South Dakota. Should be very interesting, but I'll see you guys on Monday.